Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got Dave from FRNT here. And today's special guest is Joe Bryan. And that is the creator of What's the Problem, a video that explains Bitcoin intimately, and probably the more bullish person than you. I can't believe you found someone.
Yeah.
But Joe, funnily enough, we used to have the same job as well, which I've just found out, which is ridiculous, right? Both index traders in one of the big banks on the street. But why don't you tell us a little bit about your background, and then we'll get into what's the actual problem.
Sure. Well, thanks for the invite to come and talk to you guys today. Well, as you said, I spent 10 years as a equity derivatives trader, mainly focused on the DAX, several other indices. And then I left the city to move into sports.
Sports trading, right?
Sports modeling, building automated trading systems. So I co-founded a quant engineering business in that space, and we scaled that and sold it, and then helped scale that acquiring business to be a global player today in the sports betting space. Mm-hmm. And then start of 2024, I then was able to take a step out of that business and focus on the thing that matters most in the world outside of family, which is Bitcoin.
Okay, nice.
And
when did you discover Bitcoin?
In 2020, early 2020.
How did you discover it? Like, how did you come across it? Well,
I think like many people, when the world is closed and stock markets start ripping new highs, you start asking questions.
Yes. It's not your typical price action, is it?
No, it's clearly somebody's printing a lot of money here.
Yeah.
I need to take some steps to protect my family. Uh-huh. And then you start going down that rabbit hole of hard assets. You look at gold. You then come across Bitcoin properly. Then you sell all the gold. And you realize that actually Bitcoin isn't just the way you protect yourself and your family. It's the thing that fixes the whole world.
Okay.
And then once you've realized that, nothing else is relevant anymore.
And that's what you kind of dedicate your life to now, basically, like educating people around this topic.
Yeah, everything else is downstream of the money being broken. So if you're doing anything with your life other than focusing your energies to fix the money, I couldn't justify to myself doing that and not focusing my energy on the thing that is the most important, because when you fix the money, you fix everything. And
so the problem is money is broken. Basically.
Money is broken.
And that's what the story that you've basically told in your viral video. When did you make that video?
I released it in January.
So just this year?
Yeah.
And you know, Joe, I'm so pleased that you're on. I've wanted you to come on for a while. Like for me, like my long-term Bitcoin thesis has been around this currency debasement trade, the need for ever larger central bank balance sheets and more government spending, ever increasing debt. And I know in the video you quote Lynn Alden, but like nothing stops this train. And so for me, like Bitcoin kind of just makes sense that, you know, it's the ultimate hedge against all of that. I think firstly, like in the video, what's the problem? It's the best description of that debasement trade and how that's playing out. But the other thing that it does so brilliantly well is connect like all the issues in society, from like the health crisis to, you know, sort of addiction, and to obviously the inequality divide, but you know, even war and all these things. It just, the linkage, the fact that it all goes back to the money problem. Yeah. And this is probably such a good time to be having this conversation in a world where, you know, we have a government here in the UK who's, you know, they're you know, trying to fix the problems goes back to more government, and which is the problem.
Yeah.
And then all the things that you talk about are playing out in terms of, so then they start to look at, well, let's take more, let's steal the wealth, essentially. Let's do that. That's the problem. And again, it goes back to, no, you need to fix the money. So I hope if anyone in government, if Rachel Reeves or Keir Starmer's watching this, they can look at it and go, okay, maybe we need to understand that.
Yeah. I mean, I think if everyone in the UK watched that video, we could actually start to make some changes and start to move forward. It's the lack of understanding of the problem, which is the biggest problem outside of fixing the money, is because the government controls the money, the government controls education, the government controls the media, right? And when you control the money, you can control everything. And so the natural conclusion is the government gets ever bigger.
Yeah, and it leads to corruption as well, right?
Yeah, because you have an unlimited ability to print money. You can never go bust. And then you justify...
So there's no discipline, right?
There's zero discipline.
Yeah.
Zero discipline. So we are in a monetary system where, in effect, the massive abstraction, there's just a big red button.
Yeah.
Right. And in the video, so for people who haven't seen the video yet, I would encourage you to watch it. It's made so that anybody, however old, young you are, whatever background, it assumes no knowledge but builds up the way the world works from first principles, and within half an hour, you understand why we live in the world that we live in today. Mm-hmm. And it doesn't mention Bitcoin for 30 minutes because Bitcoin is the solution to the problem.
Yeah.
And you can't value a solution unless you understand what the problem is. But ultimately, the problem is there's a big red button that exists that allows the governments, brackets, central bank, which are not independent in any way whatsoever, right? They're appointed by the government, can be changed by the government, and seem to have extremely flexible mandates.
Well, we're seeing that in real time now with like Trump bringing his own people into the Fed, basically, right?
Which, I mean, the Fed is out of control. The Fed is the cancer in the system, right? And when you have a cancer in the system, you don't say, how can we make this better? You remove it.
Yeah.
You remove it completely. It has the biggest of big red buttons. All the other countries have their own smaller big red buttons. Right? And the big red button allows you to compromise the money.
I might have to call this episode the big red button.
I don't think you could do. I don't think people are going to understand what that means, though. But it allows you to compromise the money in multiple ways, but mainly two. And there's a third one coming down the pipe. The first one is you can print as much of it as you like, because you can never go bust. You just print your own currency. You have liabilities that are nominal, and so you can always pay them. But you just destroy the currency in the process. That's the first one. The second is that you compromise there's no sense of sovereignty with the money. None. So unless you have a £5 note and give me a £5 note, that's the only way we can do a transaction where somebody's not sitting in the middle permissioning it.
Yeah.
Yeah, cash.
Right. Yeah. And they're eradicating that, right? So the money is not censorship resistant. Right? That's the second thing. And then the third thing, they're trying to make the money programmable via central bank digital currencies, which inevitably will follow. That's why we're having a digital ID push at the moment.
In the UK?
Globally. This is everywhere.
But
we think
isn't Trump massively against central bank digital currencies? That's what he's claiming, right?
Yes. So in the US, it's slightly different. So there's a fork in the road here where the US, Bitcoin is much more aligned with the US than it is Europe.
Okay.
Because Bitcoin is about freedom and sovereignty, and those are intrinsic values associated in the DNA of the United States. It's not collectivism and socialism, which is what's in the DNA of Europe, or what's being forced on people in Europe through the actions of the EU and the ECB, and increasingly in the UK as well through Labour. And so, there is a real distinction there, but stable coins are effectively just a route to a backdoor CBDC. I don't want anyone to make any mistake about this. So you have CBDCs on one hand. I mean, this went in a slightly different direction from the start.
For those who don't know, central bank digital currencies, that's what we're talking about.
Central bank digital currency is making the money programmable. You can only bring that in once you have digital IDs. And digital IDs enable your bank account. And so when you have Christine Lagarde come in and talk about, the digital euro, it's just about weaponizing the money against the people.
Weaponizing how? What do you mean by weaponizing?
Because the money itself can start to change. So right now, when you have money in the bank, that is pounds. Okay, all the pounds are exactly the same as all the other pounds. They are fungible. Right.
Yeah.
Central bank digital currency is removing the fungibility, the intrinsic fungibility in the money. So you can have money in the bank, and some of it will have an expiry date. Some of it will say you can only spend it on certain things, or you cannot spend it on other things.
Right.
And when you have a digital ID, everything you do is linked to your digital ID. So you'll be able to track all of your spending, know where your assets are. They'll then be able to use that information to adjust your spending for the greater good, right? Put limits and controls on what you can do with your own money if they give you permission to use it.
Yeah.
You lose a massive amount of freedom there, and that's the third compromise for money. But if we get to that stage, it's game over.
Yeah.
It's game over. And so this is why we need to fight digital IDs. It's like the line in the sand.
Yeah.
Right. Because it is about weaponizing the money. Make no mistake, it's not about stopping people getting jobs. Right. Because we already have, in the UK, we have national insurance numbers. That's the whole point of that thing. So clearly that's just nonsense.
Yeah.
But if you take a step back, and we'll deal with money printing in a minute, because that's like the most obvious.
Yeah.
But the other one is being able to actually own your money. Is like if you have money in the bank, you have pounds in the bank, you don't own them.
Yeah.
If you tried calling up the bank and saying, I want to withdraw my money, or walking into a branch and saying, can I withdraw my money? The answer is not yes, it's why.
That's crazy, right?
Yeah. And you'll have,
Why? Because it's my money, dude. That's why.
Exactly. But it's not. It's your money with permission.
Yeah.
Permission of the bank and permission of the government. And so you don't own it.
Yeah.
Anyone listening
well, that's because, again, the fractional banking system means that if everyone wanted to take their money out at once, there isn't enough money there, right?
Well, that's certainly true, and it links into, it's like a combination of the second and the first problem. But the banking system doesn't want you to be able to withdraw money to protect its solvency. But the reality is the government stands behind the banking system anyway. And fractional reserve banking, we don't technically have that in the UK anymore, but the way that it is set up is in all intents and purposes exactly the same. And what happens over time is that you build more and more leverage into the system because you water down the capital requirements that the banking sector has to hold to maintain its book of lending. And in the US, it's at zero now. Right? So you basically make infinite lending, knowing that you've got the Fed behind you. But this is all downstream of the money. So we can come back to that in a second. But just to finish the sovereignty piece, if you don't own your money, you're not wealthy. And whether it's money or it's stocks or it's gold, right? You don't own any of those things. You own promises.
Why don't you own okay.
Right. So money's obvious. Like you call the bank. If the government says no, the bank says no, you're not getting the money.
Yeah.
So it's not yours.
Yeah.
Stocks and shares, right? In a brokerage somewhere. You don't even know what institution holds it because you're waiting for a settlement. Has it settled? Has it not settled?
Yeah.
Who knows, right? So it's another layer abstracted away from money in an account, right?
Yeah.
So that's even, you own that with even less certainty,
Okay.
right? And you think, okay, well, what if I actually wanted to own some hard assets? I'll just own gold, right? Okay, what are you going to do? Buy some gold, or you take that, you keep it at home? Okay. If I start buying more, I'll reach a point where I'm not comfortable keeping that in the house.
Because someone can come and steal it.
Come and steal it.
Yeah.
So what do? Right. I need to
Stick it in a vault.
Stick it in a vault and I get a piece of paper. You're back to a bank account.
Yeah.
One stroke of the pen, like the US did in the 30s, gold is now illegal for the individual.
Yeah.
The vault hands the gold over to the government.
Yeah.
And you're just left with the email receipt. You don't own it.
Yeah.
You don't own any of these things at all.
Yeah.
Right. And you are not wealthy.
Gold bugs that. Huh?
Well, I think if you love gold, you're going to love Bitcoin. You just have to put the work in to understand it because gold is the...
So then why is Bitcoin real? Why is that yours?
Okay, well, think about why people value gold. Like why gold is considered, prior to Bitcoin, was considered the hardest asset. Right? It's because it's outcompeted all the other stores of value over millennia. But how's it done that? it's done that because it's bounded by energy.
Yep.
Right? It's good enough on the metrics, on the different characteristics you would consider relevant for a good money.
In terms of the supply increase that from pulling it out of the ground requires energy.
Exactly. You can't print it. You can't fake it. You've got to expend energy, real world energy, getting gold out of the ground, processing it, bring it into circulation.
Mm-hmm.
But the gold supply goes up 2% a year forever. So it doubles every 35 years or so, right? It compounded. But then when you've brought it out of the ground, it becomes the store of value, but it's not good enough to be the money. Like, so we've had gold coins in the past, but again, clunky, big. A gold coin is extremely valuable. So what do? You've got to make it less valuable to be able to use it. So you've got to mix it in with other metals. And it's like, how do you validate? It's actually gold. It's not tungsten wrapped with gold.
Yeah.
It's hard to validate, hard to move. How do you buy, lunch with it? How do you get change in it? Like a little grains of dust, gold. It's totally impractical on a day-to-day basis.
Yeah.
Can't send it over the internet. Right. So what do? Like, you put a paper layer over the top. You put it in the vault and they give you a piece of paper. It says, I own this amount of gold. And you trade with that.
Yeah.
Because it's just easier. And then Telegraph comes along and you don't need to do the paper. You just update our ledger. You update your ledger. We moved gold. But the gold never actually moved. It just sat in the vaults. Mm-hmm. And so you abstract gold from the money, right, from the currency in use. And that's the reason we have fiat today. Is the reason we have the paper layers because gold wasn't good enough to be the money. But it was the best money we had, secured by energy.
Mm-hmm. Right? Yeah.
And so you end up in a system where everyone just trades paper. The gold never moves. People realize that actually I can just issue more paper through loans and I don't need the gold in the vaults. This is where you get the fractional reserve banking coming in. Everyone starts using paper. Then there's something happens, sentiment changes. People are like, okay, I want the gold now. I'm worried you don't have it. Here's your paper back, give me the gold. And there's not enough gold in the vaults.
Yeah.
And this is how you get the centralization over time. You get the creation of a central bank that holds all the gold. And then the central bank does the same thing.
Yeah.
Right. And then so in 1971, there's a monetary history lesson here. 1971, well, after 1944 with the Bretton Woods Agreement, after the Second World War, you had all the currencies pegged to the dollar and the dollar pegged to gold. So gold was the anchor in the financial system, right? But there was dollar convertibility into gold. Initially for everybody, and then just for the central banks. But then what happened is exactly the same thing. The US realized they can just print dollars. Everyone uses the dollars. They don't need as much gold in the vaults.
Yeah.
And then the French say, how are you affording all these wars, guys? I don't believe you've got enough gold in the vaults. Can we have the gold? Here's your dollars back. And then Nixon says no.
Yeah.
And then he severs the link. And so now you end up with the dollar at the center of the financial system, all the other currencies around it, but there's no link to the real world energy anymore. But it's gone. It's just now it's just monopoly money.
Yeah.
That's
monopoly money that can always be repaid by printing more monopoly money. And this is why the fiat system is going to be absolutely destroyed. It's all going to zero in purchasing power. So to bring it back to why Bitcoin, right? Bitcoin is the culmination of the evolution of money. So you think about all those characteristics of gold. It wasn't good enough to be the money. That's why we had the paper. With Bitcoin, it's good enough to be the money. It perfects each of the characteristics. Right?
Yeah.
You can send it over the internet at the speed of light at zero cost. It's infinitely divisible. It's absolutely scarce. You know where everything is at every point in time. Everybody everywhere can verify that at any point at zero cost. You hold it yourself, right? Nobody can stop you sending and receiving it. And it's bounded by energy.
Yeah.
It is the culmination. It is the apex of money. It is where gold would be if it could.
Yeah.
Right. Because gold is real world energy manifested in metal. Right? We've brought.
Yeah.
Bitcoin is real world energy. It's 100% energy money. Right. So if you love gold and you think about the reasons why you love gold, you're absolutely going to love Bitcoin.
Yeah.
And it's just not enough people have made that. Made that leap
linkage.
Yeah.
Joe, it's really funny because there's apparently going to be a debate with ZZ and Peter Schiff because Peter Schiff's now launching tokenized gold.
CZ.
Yeah, Yeah,
The Binance.
Yeah, from Binance.
Founder.
So now Peter Schiff is launching tokenized gold. So he obviously in his mind's thinking, all right, he's obviously realised he won't admit it explicitly, but the limitation on gold it is this like easiness to fractionalize and transfer the gold,
portability, divisibility.
Yeah. But I think Joe, you've just like guys, if you're watching, you don't need the debate because Joe's just answered the reason because someone still has to hold that gold. And it still has to sit somewhere, and so yes, you're putting this layer that makes it, but that's no different from the paper like traded gold.
Exactly.
So it doesn't solve the sovereignty problem.
The sovereignty, but you're still got to trust someone that's got to sit in a vault somewhere. That at some point when the government decides, like, right, we're taking that, whoever's holding that, they either succumb to the government.
Right.
Which they're always
you know what the outcome is.
Right, so now you two obviously are the most bullish people in the world. Now, I'm not saying I'm not bullish, but I want to play a bit of devil's advocate right here. Because you're saying Bitcoin's perfect money, essentially, right?
Yeah.
And it's got all these criteria that it meets that nothing else does, right? The issue I've got, I don't disagree with it, but the issue I've got is the control that the governments and central banks have over fiat is not something they're going to willingly relinquish, okay? So if Bitcoin's the solution, and let's say hundreds of millions of people across the world are figuring that out, and they want to adopt the new perfect money system, right? Yeah. And they want to transact in Bitcoin with each other, and that's how, because that's the real money. It's not fake money that you can bring into existence, right? The problem with doing that is we still have to live our lives, right? We still have to buy groceries. We still have to buy houses and cars and live our life, basically, right? And every time we spend Bitcoin to do something in our lives, it creates a tax event, right? And then we owe the government money, right? We have to pay them in fiat, basically, right? Yeah. So the problem is, even if we all decide we want to go and use Bitcoin for our lives, right? As long as we can't just do that independently of the system and still have tax liabilities and stuff like that, then how do we really escape it? How because the government can always say, oh no, by the way, if you transact in Bitcoin, you pay double the tax, right? Because we've decided so, right? So how do we escape that? Because if Bitcoin is really the life raft, it has to be able to solve this problem.
Well, it all relies on willingness to comply as well. I mean, ultimately, everything is under the threat of violence from the state. That's how they enforce the use of fiat in the first place. It's not a free market money. You are forced to use that money. Bitcoin gives you the option. It's an entirely optional network. You can choose to use it. You don't have to use it. There is no force. It's pure free market money. And, fortunately, we live in a world where there's more than one country. And Bitcoin is competitive advantage for anyone that engages with it. And so you will get, and I don't want to give people the impression that Bitcoin will be the money of the world tomorrow. This is a slow-moving process, but it's one that is absolutely happening. And go forward 30 years, we'll look back on this episode and be like, well, that was just so obvious. It doesn't feel obvious today, but the competitive nature of the world means that some countries will fight Bitcoin, some countries will embrace Bitcoin.
So I guess the countries with the most control today will fight Bitcoin, I guess. And is that fair to say? Because they have.
Well, it depends what you mean by control. The US is becoming more and more pro Bitcoin.
I suppose that kind of counters that argument, I guess.
Yeah. Because it's freedom money. It's always helpful to have existing mental models of stuff and be like, yeah, it's a bit like that. But Bitcoin's just like the internet. We could have been sat on this sofa in the 1990s and I could have been sat here talking about how the internet's going to change the world. And you guys would be like, yeah, but it takes 20 minutes to get online, right? You have to have a computer science degree to make the computer work. And fast forward 30 years
Yeah.
of innovation,
How would we live
technological,
without the internet now?
UX improvements. It's just seamless. It is just easy. That didn't happen overnight.
No.
But you had some countries who went, we're going to go all in on this internet thing because it's the future. Right? And the US embraced it. There was a similar fight in the US about whether you should be allowed on the internet or not.
It's for criminals and
Exactly. All of the same things. All of the newspaper companies say this is never going to work. Typical things, right? It's like, so think about Bitcoin as a combination of a technological adoption curve combined with a monetization of the world combination. And so it comes back to those things. Like, these things don't change overnight, but in some countries, Bitcoin is needed. They don't have banking. They don't have the ability to be sovereign. They don't have the ability to trade with each other. And Bitcoin unleashes the free market. It doesn't respect borders.
But I agree with this. But that also suggests that, you know how you said about the newspaper companies didn't like the internet because it's going to disrupt them, basically, right? So if Bitcoin, if Bitcoin's going to disrupt the banks, why are we now seeing the banks embracing crypto?
Because they can make money from it. And I would draw a very clear distinction between Bitcoin and crypto.
Okay, so the banks aren't necessarily embracing Bitcoin. They're embracing crypto and stable coins and things like that, basically.
Well, they're embracing Bitcoin as well. But what I mean is Bitcoin and crypto are two different things.
Let's talk a little bit about that because you have quite strong views on that.
But just to add to that, like the resistance comes until it becomes inevitable, right? Like you go back to the newspapers, right? You resist the internet until you reach that tipping point where we're either with it or we become irrelevant.
We get left behind.
So now everything's online and you start that now the newspaper, well, the newspapers went digital.
Yeah.
And now the fight is, platforms like X and what have you, like of, in terms of not being able to control the information, the fights against that. Well, it's all disinformation until the point where I don't know. I think they become just irrelevant in society at some point.
You get out competed.
Yeah.
And so, we can dig into the Bitcoin versus crypto thing, but just to finish the equivalent mental models for people, it's like trying to fight the internet is a losing strategy.
Yeah.
Right. When the internet comes along, it is a civilizational change technology. You cannot like it, but if you fight it, you'll lose. If you embrace it, you win long term.
Yeah.
Right. It's like gunpowder. It's like when someone comes along and invents gunpowder, you cannot like it, but if you don't embrace it, you die.
Yeah.
Right? There are things that come along, and Bitcoin is, gunpowder for violence, the internet for information, and Bitcoin for money. It's a civilizational change event. You cannot like it. If you fight it, you lose.
Yeah.
If you embrace it, you invest a bit of time, it drives out performance for you long term. It's the third in the category of three.
I think as well, there's a huge, and it's something I've spoken about before, there's a huge element of game theory and the prisoner's dilemma in all of this, whereby, so if major economies were like, right, we're going to stop this, we're going to tax every transaction to make it, not particularly viable to spend and transact in Bitcoin. There's this huge game theory where if you're an economy that's struggling and you decide, we'll actually embrace it,
then everyone goes to
you get that leakage, and then you're again going back to the what's the problem. You got Fiat and we should get into that a little bit as well. Yeah. But you got the Fiat Island and what's the other one, Satoshi Island.
Satoshi, yes, Fiat and Satoshi.
Eventually, the money starts to leak that way, right? And they'll try and stop it, and there'll be capital controls, and there'll be all these things. We see this in China, right? Money tries to get out, but it will find a way. And there's a huge element of this game theory. You're probably seeing like El Salvador and that embrace that a little bit, where it's like, well, if we do allow it, how are you going to stop the money coming here and leaking out to that? And again, which then comes back to, all right, then we just have to embrace it.
Yeah.
It's not just the money, it's the people.
Yeah.
And this is the issue, one of the big issues that the UK finds itself in at the moment, is that you're driving out the most productive people in society.
Brain drain, yeah.
Yeah, because socialism never works. Socialism ends in poverty and death. Like we've seen this before.
Yeah.
Like the default state of the world is poverty. And so the question is not what causes poverty. The question is, what causes prosperity?
Mm-hmm.
And capitalism, free markets, supporting people.
Yeah, incentivizing entrepreneurship and innovation, right?
Exactly. It's not stealing from people. You steal from people, you drive them away. This is like basic stuff.
Yes.
Yeah.
Right. But it links back to the competitive landscape. If you are a country around the world and you want to outcompete, you make yourself an attractive place to do business. That applies equally to, attracting businesses through competitive, tax rates, regulatory, citizenship programs, as it does to Bitcoin. So just think about like the internet, and then actually make yourself the most attractive place on the planet. You will attract capital and people, and you will outperform.
Mm-hmm.
And so, to come back to the question you asked about the tax rates and the spending of money, this is just going to happen gradually, faster in some places than others, but it's a losing strategy to fight it.
Mm-hmm.
And so eventually you capitulate and you embrace it. And you also can't enforce it. You can't enforce it. You can't stop people paying in Bitcoin. You can't stop people accepting Bitcoin. You are reliant on them volunteering to pay what you deem to be appropriate.
Yeah,
or they leave.
Yeah.
Or they leave.
Yeah.
And so it's the only thing you can do which is outside the system. And what I'm not saying at all is don't pay taxes, because you should absolutely pay taxes, etc., etc. However, you have the choice, right? And Bitcoin is the only thing in the world that allows you to have that choice. Like if everything else you own is inside the system, whether it's the cash, the shares, the property, it's attached to the floor, the gold, it's just a receipt for something in the vaults. Something goes wrong, you are starting from zero.
Mm-hmm.
You need to leave, you are starting from zero, unless they say you can take them.
Yeah.
Right? Not true with Bitcoin. It's the only thing you can actually own. You can carry it in your head. It's like 12 words. 12 words, you can take it with you anywhere in the world.
Yeah.
Right? Access it anywhere. It's like, if you frame it this way, like if you were going to invent money today, it would be absurd to invent it with the characteristic you can't hold it yourself.
Yeah.
Mm-hmm.
I mean, it's ludicrous.
Yeah.
We have a money that we can't hold ourselves. You need the bank to hold it, but you need someone else to hold it. Nonsense. I mean, you would never create money like that.
Yeah.
Right? Unless it benefited you to have the system work like that. That's why we have cash being eradicated and the move to digital currencies.
Mm-hmm.
It's because they can put somebody in the middle of every single transaction to A, approve it, and B, to monetize it.
Yeah.
Right.
Yeah.
Often for the merchant gets monetized. You as the customer don't get monetized. So you don't see there being a cost, but the merchant feels the pain.
Let's talk a little bit about this idea of if it's not your keys, it's not your coins, right? Because obviously all the Bitcoin maxis and the OGs are all like, you don't want to hold it on a cold, is it cold? No, hot wallets, right?
Hot wallet,
Exchange wallets and things are like hot wallets, right? Because again, if you don't hold it. Now, I would argue most of the people who are adopting it now, coming over from TradFi, are much more comfortable having it in an ETF or having it on an exchange.
Absolutely.
Because they don't have to worry about looking after it. And they haven't actually been educated enough to know how to do that and feel confident in themselves about holding it, right?
Yeah.
What would you say to those people? Like, how much of a risk are they taking?
Well, they don't own Bitcoin for a start. To come back to the example, it is no different from having cash in the bank or shares in a brokerage account
Or gold in a vault.
or gold in a vault.
Yeah.
It's Bitcoin. It's not Bitcoin.
Yeah.
Right? Because you don't hold it.
Sure.
It's money you hold yourself. So why would you let somebody else hold it? Now, I would say a couple of things. When you first buy it, and same for me, I had it on exchange, right? Because it's the easiest way to buy it.
Yeah.
It's because it's connected
It's more frictionless, basically. Right?
Exactly. Connected to the fiat system. And it's very similar to your existing mental model of how you hold assets.
Yeah. Yeah, exactly.
But that's how the chain of thinking works with Bitcoin. You think of it like just a better version of gold, but you don't appreciate the sovereignty.
Yeah.
Right? And then you start learning about it. And then you realize that actually it is perfect money. And for me to actually hold it, I've actually got to hold it. right? And so it's just an educational and a familiarity thing, but it's also a UX, user experience thing. So like I said, we're in the 90s. It is still a bit of a leap for people to take self-custody, to withdraw it off exchange into a cold wallet.
Yeah.
Because there's no safety net.
Yeah, exactly.
That's how you're sovereign. That's the sort of the whole point.
Yeah.
But there's no one there.
Which is scary in itself.
Scary.
Yeah.
It's scary. But
so taking responsibility is an example that springs to mind is like taking responsibility for your own health, basically, right? Rather than going to the doctor and saying, "Sort me out," right? You know, you're like when you become fully sovereign and you take all your Bitcoin into your own hands, you are responsible for it. There's no backstop.
I would say it's much easier than being your own doctor, though, to be honest, because there's fewer things that can go wrong, but also the safety. Just if you think about the product UX, user experience, and the ease and the guardrails put in place and the security, that's all improving every few months, every few years, like internet, like the internet access. The core internet hasn't really changed. It's just the infrastructure around it and the user experience has become infinitely easier. We're on that same path with Bitcoin. But I would encourage people, if you've got Bitcoin on exchanges, get a little hardware device and just play with it. Just send a small amount, experience that wow moment of actually holding something yourself, right? And being able to send it to anyone, anywhere, anytime. But
do you think there's enough education out there around that?
There is. It's like anything, though. If you think about Bitcoin is free market money. You could not bring free market money into the world in any other way. It starts with a small idea and then gradually expands because you can't force anyone to use it. That's the whole point. So it's about communication. So when Satoshi invented this, he sent an email with a PDF to like 100 people. And so, the start is very, very small, and the number of people who probably interact with that is very low. Right. So it starts with a handful of people and then gradually grows. But the accessibility of that PDF, the white paper, to us, like we'd have read that, and we may have made some logical leaps, some mental leaps. Very unlikely.
Yeah.
Because it's a technical, it's actually quite readable, but still it's done from a certain position. It's not about communicating with the average person on the street.
Yeah.
So you think about the layers of abstraction, iteration, explanation, accessibility that needs to be built around that idea. So you have that penny drop moment for more and more people around the world. It takes time.
Yeah.
Especially because it's optional.
Yeah.
And so
what percentage of the world have kind of cottoned onto this, do you think, right now?
When you say cottoned onto this, to the level of to agree with everything I'm saying, or to think that everything I'm saying is entirely obvious and they agree with it, like well less than 1%.
Yeah.
The people who think they own Bitcoin, much more than 1%, maybe, 5%, maybe. But most own it through an ETF or through a portfolio, or like they own some MicroStrategy shares.
That degrades the whole point of it, right? Why it exists, right?
There's two ways to look at it. It's like you're buying paper Bitcoin, or you're buying derivatives of Bitcoin, which is a negative if that's where you stopped. But it's also the start of your journey, because you start learning about it. And when you start learning about it and you start seeing the world for how it is, because the money is broken, you then go from thinking Bitcoin is a incredible asymmetric trade to thinking Bitcoin fixes the entire world. I need to spend all my time on that thing.
Yeah.
Right. I need to take self-custody. There's a lot of steps in between those two things.
So something that's funny to me, Joe, is like I studied economics and very much kind of focused around monetary economics, macroeconomics. And in understanding that, I don't know how anyone who studied that doesn't get Bitcoin like that. Like when I hear economists and stuff saying, no, it's a scam. I'm like, there's one of two things that I know to be true. Number one, you've not really looked at it. You've just kind of had this preconception and you've not actually looked into it. Or number two, you actually don't really understand core economics. You might have a PhD in economics. You do not understand the core principles of economics, because if you did, you would understand Bitcoin. And I'll take that thought to the grave. Because I just know it's
agree.
true. Yeah.
I absolutely agree. If you have a PhD in economics, you're absolutely not going to get Bitcoin. I would go as far as to say that, because not only are you're pointed 180 degrees in the wrong direction. So it's much harder for you to do a full 180 after spending years of your life going in the wrong direction, because that Bitcoin is first and foremost an ego test.
Yeah.
Right. Because to recognize Bitcoin is valuable is to recognize that it solves a problem. And it's to say that you were wrong, because everything you believed to be true is incorrect.
You have to relearn everything, basically.
You have to relearn everything, because economics as a subject is taught incorrectly, right? Because we live in a Keynesian world. So, I mean, again, zooming out, we live in a fiat system where somebody can create money for free. So they can print what you have to work for, which is just fundamentally wrong. It's just so obviously wrong.
Yeah, we've said that before.
So obviously wrong.
It's
but when you think
ridiculous,
about the consequences of that thing, somebody has the ability to print money limitlessly. So if you had that ability and you would use the growth of the state to ensure that the education system was fully aligned with the need to press the big red button, not the dangers of pressing the big red button. Right? And the need to press the big red button is to embrace Keynesianism.
Growth, keep growth positive, right?
Is that you need inflation.
Yeah.
So we're
again, just for those watching who haven't yet watched, and you have to go and watch What's the Problem? The big red button, obviously the money printer.
Yeah, it's the massive abstraction of the entire financial system just into one button that they can press. But here, it's by pressing it, they're not not making the money programmable, or they're not making the money, removing censorship resistant nature of the money. They're just printing more of it.
Yeah.
But we know the system is set up in this way because all the central banks target 2% inflation.
Yeah.
Right? So they're saying
higher now.
We want to make you just 2% worse off a year.
yeah, we're going to tell you we're going to target 2%. We're actually going to report it as 3. It's actually 10. And that's just the visible stuff.
Yeah.
It's actually more like 20.
Because in the video, you allude to the idea that actually prices going lower isn't necessarily bad for society.
It's actually the natural state of the world. And this is why economics is 180 degrees the wrong way around. So, when all the central banks are the epitome of, economic knowledge, right? That's like the pinnacle.
Yeah.
Right?
Yeah.
And then that flows down through the universities, and it's all about Keynesian economics, the need for inflation, because without inflation, you can't drive growth. And to think about that statement means, unless we steal from you, we can't have an economy that works. I mean, that is just so obviously wrong. Just so obviously wrong. How can you base any economic system on theft? I mean, it's not taxation.
Theft of your
It's
purchasing
actual
power, basically.
Theft of your purchasing power.
Yeah.
So to give an example here, like imagine I gave you £1,000 today, right? And I said, protect that for 10 years. You don't keep it in the bank. Right? Because you know, and I know, the purchasing power is going to zero because the money's broken. So you then put it in speculative assets. You've got to find some way to protect the purchasing power as a proxy store of value because the money is broken. Okay, but if you abstract that out a layer and said, okay, I'll give you £1,000 in 10 years, it's going to halve in value in purchasing power. What do you do with it? Well, you've got to do something with it. You either invest it or you spend it because it's melting. If I said to you, what about 1 year? It's going to halve in 1 year or halve in a month or a week or a day or an hour.
Hyperinflation, that is, right?
Yeah.
It is, but think about your decision making. As I shorten that time frame, is your decision making improving or deteriorating?
Yeah, deteriorating.
Deteriorating.
Yeah.
Right, so you're making economic decisions which are becoming increasingly bad as I shorten that time frame. And then you're trying to drive an economic system from that. You're destroying capital. You're forcing people to make decisions because the money is being eroded.
Because they can't think strategically and they can't think long term.
So they're under pressure. Whereas if you flip that and said, in 10 years' time, it's going to be worth 10% more.
Yeah, your
You're then
purchasing power
not
will
under
increase.
the pressure to spend it. You make more informed decisions.
That's right.
You have a baseline cost of opportunity cost, right? And that 10% is coming from the productivity of society, accruing to the
innovation.
purchasing power of the money. Okay, and so you still make investments. It's not like you don't spend it, but you make investments where your expected return is higher than the baseline productivity gain through society.
Yeah,
and the risk reward is there.
And that point, productivity gain, growth should be coming because we are getting better. Growth should be coming because we are becoming more efficient, we are becoming more productive, not because we are just pumping more money into the system. Right?
Exactly. And so, that example there just shows you how fiat currency or inflation drives poor decision making, which undermines the economy. That system clearly is not logical. Clearly not logical, just based on those 2 minutes. The logical system is to have a hard money that cannot be abused. Yeah. So we shouldn't be targeting a positive inflation rate at all. We should be allowing the productivity of society to drive prices down and quality up over time. Right. And that productivity accrues to the purchasing power of the money, which lifts the quality of life for everybody.
Yeah, and I think that's the key point, because there'll be economists watching this saying, well, actually, deflation that sends this negative spiral, because if you think things are going to be cheaper tomorrow, then you hold off purchasing because you get it cheaper tomorrow.
Yeah.
And then, but again, it's not deflation in that just everything's falling. It's the quality of products is improving. So like, hence you still get the iPhone today, knowing that iPhone is going to be worth less tomorrow, but then you want the next one that comes along that is actually better.
It's such an obviously incorrect argument to say people will stop spending.
Yeah.
Right? It's like the iPhone comes out every year.
Yeah.
It doubles in quality, it doubles in capacity, and every 2 years it costs the same pretty much. Right?
Yeah.
But the rapid technological innovation, people don't say, I'm going to wait till next year to buy it. I'm not going to buy a laptop this year. You buy it because it adds to you, it's valuable in some way.
Yeah. But it forces you to be more discerning about your decisions, right?
Exactly.
That's what it is.
Exactly. But think about how that compounds over time. You can be forced to invest and spend today because the money is melting. You're making poorer decisions. You're destroying capital by doing that. And you're driving a society that thinks shorter and shorter term. Okay. If instead you were thinking longer term because you weren't under the pressure to spend it, you would make higher quality decisions, less capital would be destroyed, and you would compound better decisions on better decisions on better decisions. And very quickly, you reach a point of growth which far outstrips the fake growth you get from just forcing people to spend because the money's melting.
Yeah.
And you only get the deflation in this scenario when the economy is working.
Yeah.
Right.
Yeah.
So if it was causing the issues that they talk about, you wouldn't get deflation, because it's the deflation and the productivity gains and the competition which is driving the prices down and the quality up.
Yeah.
Right. So you can't evaluate it on its success and say that's the problem.
Yeah.
Because that clearly doesn't work.
This stuff's just so obvious. Like,
it's so obvious.
I love the way in the video, and again, we keep plugging the video, but it's an absolute must watch. But I love the way you connect the dots for the not just money, but like how by messing up the money the way we have and creating these bad decision making essentially across the entire system, just the quality of life for all society deteriorates, right?
Yeah.
So you get like mental health issues, you get the quality of your food going down, and you get government...
Which creates the health issues.
Yeah, and then you get big pharma, and you get incentives being completely wrong, and government stepping in and bailing out all these different massive sectors that have come in and been corrupted by all this bad decision making, right?
And corrupted by the money.
All stems from the money. I mean,
it's amazing.
But this is again so obvious when you just lay it out. So like imagine, right? So let's imagine the government can print money for free, right? And in the video we're talking about two sides of a theoretical island, right? And so it's not meant to talk about today, but it reveals where today comes from in this imaginary scenario starting from first principles. But when the government prints money for free, it goes into the account of the government. Right? And again, I'm abstracting creating money for free to simplify it, but this is quantitative easing. It's expanding the balance sheet. It's the monetization of the government debt by the central bank. It's the bailing out of the banking system when it gets over leveraged. All of these things ultimately lead to more money being created at the national level, which debases the currency for everybody. But if we abstract that away just to government printing money and it goes into the account of the government, for that to reach society, they've got to spend it in the economy with people close to the government, with weapons manufacturers, pharmaceutical industry, all of these things. But when that starts, if you didn't have the money, the only reason prices would change is if there's a change in demand and supply, which again is obvious. So when someone comes along with fresh money, it looks like demand, but it's not demand, it's just new money. Right. But it drives prices up, obviously, in the areas connected to the government. And so those areas become more profitable, which then acts as a signal to everyone else in the market. I need to move closer to the government.
Invest in there, basically. Right?
Well, if you're an active entrepreneur, active capital, it's like, well, it's more profitable to be closer to the government now, supplying services to the government. I'll go and compete over there. And so you get all this active capital and like the growth of Wall Street, for example, moving closer and closer effectively to the big red button, fighting for something and deteriorating the competitiveness of the rest of the economy because it's the government acts like a magnet. So then you start to undermine the productivity gains everywhere else while driving prices up over here. As those companies, recipients start to spend money on raw inputs like hiring people, energy, raw materials, they drive the prices of those things up for everybody, regardless of whether you're close to the government or not. And so now everyone in the economy starts seeing their input costs go up. It's because the government printed money. It's not because of Putin. It's not because of some random thing. It's because you printed money, guys. Brexit. It's because you printed money. Right. But now everybody feels it. That restaurant down the road is now under pressure. Right. And the small profit margin they had previously is now being eroded. And so every entrepreneur in the economy is then forced into a decision. It's like to be an entrepreneur is to take risk, which you don't have to do. If the risk reward is not there, I'll close my business, I'll go and work for someone else. They can take the risk. Right. So you start to see unemployment, businesses close down. If you try to reestablish your profit margin because your input costs have gone up through no fault of your own, you have to then make a decision. And the obvious thing is, well, I just pass on the price increase to the customer, keep the product the same size, same quality. But now the customer's worse off because their salary or their wage is not going up at the rate that the money is being printed. So they're getting squeezed and that's your cost of living. But alternatively, if you think about a manufactured product, they might say, well, I don't want to put the price up. I'll adjust the packaging and I'll make it 10% smaller and it'll be the same price.
10, probably 30% smaller
30%.
These days.
Yeah, but this is shrinkflation.
Yeah.
So you've got visible inflation through the prices going up. You've got semi-visible through shrinkflation. And we all see this. We don't always see it. So it's semi-visible, right? Or they say, well, I don't want to put the price up and I don't want to make it smaller. I'll compromise on the quality.
Quality of it,
So I'll fire people. I'll make it with less people. So less expertise goes into it. Or you can't get someone on the phone now, there's nobody there. Or I'll compromise on the actual input quality. So, the raw materials and the components used to make something. So now things don't last 5 years, they last 2 years. It's still inflation.
Yeah.
You have to buy it multiple times through time. It's still inflation. It's just not day one
doesn't
inflation.
feel like it's like stealth inflation, isn't it?
Exactly. And it's not in the numbers. The shrinkflation is not in the numbers. The quality compromise is not in the numbers.
That's true. Yeah.
Right?
Yeah.
And so inflation is a spectrum. It's the visible, it's the semi-visible, and it's the hidden. And for the hidden, if you're talking about a mechanical product, then it's components. But that's when you use it multiple times. What about if you only use something once? Like food. Right. So we start consuming stuff of lower quality.
Yeah.
It's like fresh ingredients replaced with increasing levels of industrialized sludge, right? Because it's cheaper to make. It may even taste better, right? So people are forced down the quality curve through the cost of living crisis as well, because the prices are going up. They're having to make decisions and compromise more at the same time the producers are compromising on the quality to try and reestablish their profit margins. And so we have an obesity crisis. Right? It's because the money's broken. Like, we're consuming things we should never be consuming.
Yeah.
Right. So all of these things, and then you have the obesity crisis and the cost of living, and then that all flows down into a bunch of other stuff. But that's just consumer inflation.
Yeah.
All consumer inflation is just the money printer. Prices should be going down through competition over time, and quality should be going up, not the reverse of what we see today.
Joe, it's interesting as well. I mean, it's something I've been talking about on this podcast, which I think for markets was quite significant, and I think certainly you see in equities like respond to it. Bitcoin, well, I think Bitcoin's got and wider crypto's got other stuff going on at the moment, but the implicit acceptance from the Fed of a 3% inflation, which they've accepted, they've just cut rates and we're still at 3%. And we know real inflation is much bigger than 3%, right? But even now, them going from 2% to 3%, implicitly accepting that as an inflation level in the economy, has huge ramifications for what it means for asset prices, but also for all these other issues you're talking about. And you kind of go 2% to 3%. And again, going back to your video, you said about their hope and their best case scenario is to have this kind of controlled inflation that inflates away the debt without losing kind of control and the confidence of society and the credibility, that we still have faith and belief in the money and the system that governs it. Like, so 2%, I think, is kind of just like, it's a small enough amount that people don't realize their money's being stolen and their wealth is being stolen from them. And hence, obviously, those that own the assets, they're fine. They're kind of hedging themselves. The wage earners don't. But like 2% to 3%, it's kind of like, it's like this Overton window of like, okay, 3% kind of sounds not a lot. It's a 50% increase in what they're targeting in inflation. But again, the kind of multiplier effect of that is huge, which again, I'm like, you're again, currency debasement, you're debasing that currency at such a quicker rate now that, assets and including eventually Bitcoin will just go higher more quickly than even I was thinking that it would do, just because again, you're reacting the same way, and that we just need to keep inflating this away and keep pressing that big red button.
Yeah. The outcome is known.
Yeah.
And the Fed talking about all these things is like doing a rain dance. Like, it doesn't change anything.
Yeah.
And also people don't believe it. Increasingly don't believe it.
Yeah.
Because once you zoom out, it's just very obvious they're going to continue printing money and expanding the balance sheet until the dollar goes to zero, the euro goes to zero, the pound goes to zero.
Yeah.
Everybody already knows this. This is why, I said before, if I give you £1,000, you put it in the bank for 10 years, you wouldn't keep it in the bank for 10 years.
Yeah.
Mm-hmm. Like, we already all know the money is broken.
Yeah.
Right. I mean, and it's not a controversial statement.
No.
But because we all implicitly know that, we all implicitly know the outcome.
Yeah.
Is it going down forever? And so to sit around and listen to Jerome Powell talk about targeting this inflation rate or that inflation rate, it's meaningless.
Yeah. It's meaningless.
It's meaningless. Zoom out, the outcome is it goes to zero. And so what's going to happen is they're going to destroy the purchasing power, and all the assets are measured in that thing they're destroying.
Yeah.
So
Joe as well, like a friend, obviously, like as we sit here speaking, like Bitcoin's under pressure, I think like sub 104K.
I did want to talk about that a little bit, like why that is.
Yeah. And it's all linked in my view to the some of this funding stress that we spoke about in the US banking system.
But apparently there's a lot of whales been selling, right?
There's whales that are selling, and part of me actually wonders, is a part of that it's
probably Joe lightening up.
Yeah, and actually there's a question I want to there's a question I want to ask.
What? Yeah, I mean,
there's a question actually I want to ask you around this in a sec, actually, around are we with the involvement of Trump in the US government, and the fact that we now in the world of crypto are looking for, we need the regulation, we need,
It's the financialization of Bitcoin.
Yeah, are we moving away from its original purpose? But yeah, it was funny because just going back, so a friend of mine actually this morning messaged me to say, you're always bullish Bitcoin, but what's going on? And I'm always very relaxed because I know the ultimate destination, like Bitcoin goes to 1 million and then it goes to 10 million because nothing stops this train. But the irony for me is that everything, when you understand like the monetary system, and particularly in the US and how it plays out, like it relies on ever more liquidity, ever more money printing, right? And we saw, so they printed all this money, a lot of it, and all this excess reserves ended up in this RRP, which is like, banks essentially parking that cash at the Fed because there's nowhere else to put it. And we've seen that 2.5 trillion drawn down, just coming into the market, and assets just going up and up and up and up. And then we hit zero, right? Which is kind of where we're at now. And then there's still excess reserves in the banking system that weren't part there. So they've kind of come in, and now they're kind of getting a little bit dry. Meanwhile, you've had the TGA, the Treasury General Account, which is the Treasury's bank account essentially at the Fed, building. And because they're locked down or in shut down, they're unable to spend that, right? So that's another drain. But you're watching these dynamics play out. And so what's going to happen? The shutdown ends, TGA gets spent, right? Liquidity flows back in, Bitcoin goes up. This is what's going to happen. Equities and that, like, everything keeps going up, and Bitcoin will hit new highs, as I think, as soon as that happens, right? Well, selling aside and some of low supply dynamics. So then we have a good run, and then the TGA, then that cash then starts to peter out, and then what you're going to have is, year end's there's going to be some issues around that. Just there always is in terms of financing year end as banks reduce lending. But eventually, what's going to happen, and I don't know at what point next year, but again, because you've got this deficit that needs funding, and now the excess reserve levels in banks have fallen, right? It's going to basically be, right, we need the red button pushed because we need to fund this deficit. So the Fed, they're not going to call it QE, but it's going to be some sort of monetary operation. This is just to ensure normal market functioning, because normal markets don't function without that liquidity. So then they are going to press the red button again. More money comes into the system. Global money supply just inflates. Bitcoin ends at like 250K or something like that. But I'm seeing it play out. So when people this morning message me and say, like, how you relax about it, I'm like, because I know what's causing this. It's this tightening system that requires now more liquidity, which will at some point come back in. Because you can't get out of it.
You know how they react to these issues.
Because there's no other way now we've opened that thing.
Because they're not going to leave it to free market forces to like create this like liquidation flush out, basically, right?
I guess as well, just to bring it back to this conversation. So I hope everyone listening to this can kind of follow and logically kind of connect the dots on this and how the money printing has led to all the issues. We kind of understand, okay, Bitcoin is like the hardest asset, and it's got all of gold's like qualities, but the added kind of benefits, particularly in terms of being able to hold it yourself and own it yourself, and a better form of money in terms of you can transfer it all around the world, and you can fractionalize it and have micropayments and all that sort of stuff much easier. I guess the question is, Bitcoin's the solution, but how do we, given that society, and we've opened the Pandora's box of money printing, and that's the downward spiral that society's on, is Bitcoin a solution just so much in that we hedge ourselves against this? So those that are lucky enough to be in it can hedge against it and at least just get wealthy whilst society degrades, or can we sort of, if you like, save society and turn this thing around by going onto the Bitcoin standard?
Yeah, the world would be a very dark place right now without Bitcoin. Because you can see everywhere that nothing stops this train. Right? They're going to print money forever, and they're going to destroy everything. And it's not just destroying the money, it's destroying society for all of those reasons that we've seen, right? This is playing out in slow motion.
Yeah.
But this is how all fiat currencies, and this is just the Weimar Republic. It's just not. It's just 100 years, not 4 years. It's exactly the same.
It's the way empires collapse, basically.
Yeah.
Right?
And by the way, every couple of years, what we see another currency goes to the wall. Like the dollar's the best of a bad bunch, right?
Yes.
It's still it's still the cleanest shirt in the laundry. Every year you see another currency fail, another one fail. They all kind of seem to roll up into the dollar, but the dollar at the same time is also failing against harder assets.
Yeah.
People worry about quantum computing, though. Is that something that ever worries you about it kind of derailing the Bitcoin network?
Well, it destroys everything else far sooner than it destroys Bitcoin.
Okay.
There is, like, if you're worried about quantum computing for Bitcoin, then you've already given up on having a bank account or owning anything else.
Okay.
Right. It's everything else comes under threat from that way, way, way before Bitcoin. And Bitcoin is a living organism. It's a free market in money. And that includes the code. That includes defensive measures, improvements. Right. And it's open source for everybody, and you can't force anyone to use your branch or your improvements. And so it's a living organism, and the free market will solve these things.
Mm-hmm.
Right.
Cool.
I'd be much more worried if I had my money in the banks or in something else, because there's no protection against it. But yeah, to come back to the things that you were talking about before, I'd just encourage everyone to zoom out, because like you can get sucked into the day by day narrative, or the price has gone down, gone up when measured in this monopoly money. But Bitcoin is the only free market in the world. It trades 24 hours a day. Anyone in the world can trade it. The S&P is not a free market. It's closed half the time. Does everyone have market access? No. Do you have short selling rules and these things? They change whenever, right? It's all manipulated, But fundamentally, the engineering is broken in the system. That the money is broken. So all of these actions that the Fed takes to ensure normal market operations, all of these things, are them dealing with the consequences of a broken system.
Mm-hmm.
One which is fundamentally broken because they're changing the quantity of money.
Yeah.
Right? It's all broken. And this is why when you look at the Bitcoiners generally as a demographic, I would encourage everyone to Google Myers-Briggs.
Myers-Briggs.
Have you heard of Myers-Briggs? It's the personality test.
Yes.
Okay. Google Myers-Briggs Bitcoin.
So you heard of that? ESTJ.
No.
So you take a quiz, and it's sort of like, what's your preference between various options? And it's like, there's different forms. It's like 20 questions, and then it will say you are this code, INTJ or INTP,
Like
or
introverted, extroverted.
Right, okay. Yeah.
and it's critical thinking, these sorts of things. And then somebody did. This is going a bit off topic, but I think it will help to illustrate the point. They did a sample of the general population, and then they did a sample of Bitcoiners. And 50% of Bitcoiners are in the category of the population which is around 3% of the population. And they're engineers. It's engineers, physicists, mathematicians, people who think in structured systems.
Right.
Mm-hmm.
Right? Because they realize it's broken.
Mm-hmm.
Yeah.
And it's not about feelings.
Yeah.
Yeah, it's logical.
It's logic.
Critical thinking to say this just doesn't work like this,
Yeah.
right?
It's maths. It's logic. It is broken. When a system is broken, it fails.
Mm-hmm.
You can try and stop it failing for as
plug the
long as you
holes.
can, but it's fundamentally broken. And because it's fundamentally broken, it's going to die. Right? You can't fix it from the inside.
Yeah.
You move to an engineering system that is perfect,
Yeah.
that is anti-fragile, that the more it gets put under stress, the more people attack it, the more valuable it becomes, because the more robust it becomes. Right? This is why you have such a skew in the personality types. Right? And I come back to the thing I was talking about before about the accessibility of the information. if you talked about the personality types of the people who are on that mailing list to start with, even more compressed.
Yeah.
I would imagine on that scale. But over time, we add these wrappers to make it more accessible, more intuitive for people. We improve the UX so that they don't have to think about the engineering. They just use it. They don't have to understand how the internet works. You just use it. Right? And so over time, you're going to see this distribution of personality types start to match the full population. And this is when it will just be the money.
Yeah.
Just be the money.
I think this is the thing that almost scares me in some ways, is like, because you would think or hope that a government and governments would be the people to understand this stuff and to almost say to people that you don't need to worry about it, but we like this is what's going to be best for it. Like, again, it's an idealized vision of a world whereby governments actually want the best for the people, and in which case they would realize this.
We're a long way from that.
We're a long way from that, right? I mean, to that point, how so as quite a Bitcoin purist, how do you feel around the idea of the US having a strategic Bitcoin reserve and this involvement? Like, because on the one hand, we all celebrate it. Yes, like Bitcoin, the US is now open to Bitcoin and is a champion of Bitcoin under this administration, at least for now. How do you view that and the risks and benefits to that?
It's similar to the ETFs. It's a double-edged sword, but the reality is Bitcoin is for anyone.
Yeah.
And it's the logical thing is to engage with it. And as I said before, the DNA overlap between the United States and Bitcoin is a significant one.
Yeah.
It's how you drive out performance. Bitcoin is also the only way out for governments. The only way you don't become insolvent. I mean, I use the word insolvent because you can print your own money forever.
Yeah.
The only way you don't destroy your currency is to engage with Bitcoin. That's how governments will recapitalize themselves through Bitcoin.
Yeah.
Right? And so it is the logical conclusion. However, I view it in a more positive way because I've never met a Bitcoiner who thinks a bigger government's a good idea.
Yeah, yeah.
Right. And so we are getting to the tipping point now where the number of Bitcoiners, and I'll put brackets crypto, in a wider sense, we're getting to the tipping point where that becomes a material election issue.
Yeah.
Right. And so you think about what happened in the US with Trump getting elected.
Mm-hmm.
He came out and he went to the Bitcoin conference. It was in Nashville. And he said, we're going to create a strategic Bitcoin reserve. He won all the votes. He said, we're going to make the US the home of the crypto industry. He won all the votes from crypto people. Because Bitcoiners, I can't speak for crypto people because crypto is fiat and we can talk about that in a minute. Bitcoin is the only thing that matters. We're one issue voters.
Yeah.
Because it's the most important thing in the world to fix the money.
Yeah, because they've been orange pilled and they realise that basically.
Yeah,
right?
everything else is a secondary issue. If you fix the money, it fixes all the other things. Let's just fix the money. So if you tell me you're going to prioritise fixing the money, I'll vote for you.
But the problem is he really going to fix the money?
It doesn't.
I don't think he is.
Well, do politicians ever do what they're going to say, what they say they're going to do? And no, they won't fix the money. However, the issue, they become closer to getting to the point where they realise they need to. Right? Whereas you had Elizabeth Warren come out on the Democrat side with an anti-crypto army. Right? No one's a one-issue anti-crypto or anti-Bitcoin voter.
Yeah.
0 votes.
Yeah.
Right?
Yeah.
So you go, I'm pro-Bitcoin, all the votes. I'm anti-Bitcoin, no votes. You lose all the Bitcoin voters and you don't gain any others.
No.
So why would you do it?
Yeah.
Why would you do it?
Yeah.
And so the obvious strategy now for any politician is to be as pro-Bitcoin as possible, to be as pro-crypto as possible, because you don't win any votes by taking the opposite position. And you win votes from people who would have voted anyway, but you also activate new voters. I wouldn't have, if I was in the US, I wouldn't have voted. But if someone says, I'm pro-Bitcoin, I'm actually going to make the effort to vote. And so it's the obvious strategy. It's a competitive advantage to embrace the Bitcoin. And then when you do that, you start to learn about Bitcoin,
Yeah.
right? Bitcoin has a seat at the table in these conversations. The politicians start to think, right, well, I've got crypto voters, I've got Bitcoin voters.
Can we
and
talk
then when
a
you
bit-
go down that path, let me just finish, sorry, Imran, let me finish the thought. When you go down that path, you realize the money's broken and we need smaller government, right? And then Bitcoiners start to be, ever more numerous, ever wealthier. They also overlap in the Venn diagram massively with the most productive people in the world, right? Actually get things done. That's an incredible combination to drive real change. That flows up to the political level. Countries then start becoming more and more pro-Bitcoin. They realize that the only way out of this mess is to recapitalize your entire balance sheet with Bitcoin, because it's going to become money of the world, right?
Yeah.
This is how all these small steps are obvious,
Yeah.
right? But in combination, lead us to a very radically different future, which is far more positive.
And it goes back to, again, what we spoke about earlier, this game theory idea, that first mover, that those that get that first, like ultimately win out. The hope, I guess, and is that we'll all end up in a more efficient and better place than we would have been. But again, you really win if you're the first to go there, which I think you're seeing in certain countries. And it's going to be really interesting to see how this plays out. And I know how it's going to play out, but particularly in emerging market countries that have had such issues with their currencies, like those that embrace it and start to win, then it will become a massive flood of, we all need to join that. We all need to be in that. And it's
absolutely. Bitcoin is a competitive advantage, but this is the free market.
Yeah.
If you're bringing in neutral, independent money for the world, which is an entirely optional system, it has to operate via the free market. And what does that mean? Then it's a competition.
Yeah.
But you called crypto fiat. Can we talk a little bit about that? Because this is a very pro-Bitcoin conversation, understanding how that is perfect money.
Yeah.
Where's the contrast between that and the rest of crypto? Because the US is embracing crypto as a whole, right? Not just Bitcoin.
Yes. But the distinction is a material one. Whereas in people's, it may not be true for the people watching, but in general, the public's, the way they see the world is like normal world over here, crypto world over here, of which Bitcoin is a small part. And I say small part because Bitcoin doesn't have a marketing department. It doesn't have a CEO. It doesn't have any of these things. It appears from the outside to be a small part of crypto because everything else does. Right?
Yeah.
The reality is, the real mental model is fiat world over here, of which crypto is a part, and Bitcoin.
Yeah.
Right? Because Bitcoin.
So the rest of crypto is not on the island, is not on the Satoshi
Correct.
island, right?
Correct.
It lives on the Fiatello island.
Yeah, it's all going to zero.
Yeah.
All going to zero when measured in Bitcoin. Absolutely.
Interesting.
Right. It may retain some value when measured in the thing they're printing forever, but all of crypto is somewhere between fraud and speculative technology looking for product market fit. Somewhere on that spectrum.
Yeah.
Right. This is why you have 30 million cryptos. Oh, maybe 33 million now.
Yeah,
34 million, 35 million. Because there's no friction, there's no real world constraint to creating them.
The scarcity factor.
There's no scarcity. It's not rooted in energy. And so Bitcoin is rules without rulers, independent, neutral, money for the world, bounded by energy. Right? You cannot fake it. It's an optional network. No one has a big red button.
Yeah.
Whereas in crypto, everything that's not Bitcoin is not based on proof of work, not based on energy. And it has a big red button somewhere. It has a CEO or a marketing department, or it has pre-mines, or it has tokens, has the ability to change change something in the system somewhere, which is akin to a big red button. It is just fiat. It is just fiat. And people trade it, and they trade it like they would stocks and all of these things. It is just another sort of mini asset class, but it's not money.
Yeah, I mean, I think the
money.
distinction I make in my mind is Bitcoin as like digital gold, digital property, digital money, and I think the other crypto is they're more like tech plays in my mind. So they're just very different things. Now I think like you say, a lot of them go to zero. Some of them become, will add real value and network value and become really profitable tech plays. And it's trying to pick your winners within that. I think of them as two different things. I wouldn't say that I think all crypto other than Bitcoin goes to zero. Some of them become like really fundamental, networks that we all transact on and be a part of.
Zero when measured in Bitcoin.
When measured in Bitcoin.
Okay. Everything's zero measured in Bitcoin.
Yeah, because Bitcoin's going, in my view, going to monetize the entire world.
Yeah.
Right. And so these things are technology plays.
Yeah.
It's not money. And the terminology here is tricky for people.
Yeah.
Because when we talk, people use Bitcoin and crypto interchangeably, especially in the media, and they're two very distinct things. And I think the crypto industry as a whole likes to conflate the two because it gets the credibility of Bitcoin mixed up. So it benefits the crypto industry to have that lack of clarity. Whereas Bitcoin is just Bitcoin. It doesn't have the marketing department. But to zoom out and to think, like, pretty much everybody has heard of Bitcoin. Right? It's one of the most well-known brands in the world. And it doesn't have a CEO. It doesn't have a marketing department.
That's genius, isn't it?
Yeah. But people don't understand. Like, if you asked 100 people, why do we need Bitcoin? Randomly on the street, I'd be surprised if even one person said to you to separate money and state.
Yeah.
That's why we need Bitcoin, to separate money and state. It's the only way of doing that. Like we've never had in all of human history, we have never had anything which allowed us to do that. Bitcoin is that thing.
Is that your, because it's funny, we all like working in this space, I mean, Thanksgiving coming up in the US, Christmas coming up, around those conversations around the table, and then you always get the interested family member, and it's kind of, I'm always a bit like, where do I start on this explanation? What is for you, Joe? Is that your really quick
one-liner?
Yeah, your one-liner when someone asks you around the Thanksgiving dinner table, if we were in the US, what's the point of Bitcoin? It doesn't serve a purpose. What's your one-liner to that?
Well, the whole thing is it's a separation of money and state.
I like that. It's quite a succinct way of putting it.
It's exactly what it is.
Yeah.
It removes the big red button. Nobody should have a big red button.
Yeah.
No one should have an exorbitant privilege in the system to print for free what you have to work for. Because if they do, they're stealing your life. Because...
it's dramatic, but
it's dramatic, but it's 100% accurate. Like if you go out to work today and get paid in something,
that's right.
Okay, they can print it for free.
That's right.
Which means at the end of the day, what you earn is worth less. They have stolen your money, but that money was arrived at for you spending your life earning it. They're stealing your life.
Yeah.
And then we wonder why society is corroding. Because we have this theft of our lives. Right? We have to work longer and work harder to try and maintain the lives for the people that providing for the people we care about because somebody's printing it for free.
Yeah. We've talked about this exact point on the show. Let's try and end it on a positive note.
So I'd say it's not been terribly negative, but
no. But I think it is that the underlying kind of it is one of like positivity in that there's this solution. It's we have to address like the issues that are all the problems that are currently under and in society and the media and government. I say we talk about like Gary Stevenson's, all these people in the world are trying to find solutions.
Don't
to
get
problems
me started on Gary.
That goes back to this whole point. The money's broken. We need to fix the money, and Bitcoin is the fix.
But let's say someone's watched this video and agrees, and this makes sense to them. What can they start to do in their life to move towards this Bitcoin standard, right? Because it's not like a quick thing, right? That you can just suddenly convert your entire life into Bitcoin, right? So what would you say to the person who's not really thought about it this way before, but understands and sympathizes to all the things that we're saying? What steps can they start to take to start heading in the right direction?
I would say start learning about Bitcoin. I'm not encouraging anyone to buy Bitcoin. I want people just to learn about it. Because once you've seen the video, you can't unsee it. Like you finally have a clear mental framework for the world, and you can slot Bitcoin into that. It's like you finally have that place that Bitcoin slots in, and then because it's a story, you don't forget it. And then you start to see the world differently. You start to see, okay, well, that's because of this. That's because of this. That's because of this. And it just eats away at you. And then you start to learn about it.
Yeah. Well, I do love the way you've made it a story, and hopefully people will be able to relate to it, and it will kind of go in a bit easier than all this financial jargon that gets thrown around and stuff.
It's super accessible. You can share that with a child, with an OAP. It just explains the world in super simple terms that everyone can agree with.
And we'll make sure we put the link to the video in the show notes to this so people can watch that. But Joe, thank you so much for coming on.
It's been a pleasure. Thanks for having me.
Yeah, so interesting, fascinating.
It's been an enlightening conversation.
I know my viewpoint is a fairly may seem fairly out there for some people, but it's rooted in logic and critical thinking. And I think ultimately, deep down, everyone knows it's right. And it's just sometimes trying to take a step back and think through why you're making the decisions you're making in your own life, and realizing it's actually because of the things you're subjected to, not because those are the actual decisions that you want to make in your life. Once you zoom out and you can see that, then you can start to make some changes. You start to live more deliberately.
Yeah, with intention.
Yeah.
Yeah, perfect. All right, guys, we're going to call it an end there. Hope you enjoyed this special feature-length episode, and we'll catch you back. I'm actually out next week. I'm in Miami, so my man Dave will be running the show next week.
Yep.
Thanks for watching. Like and subscribe. We'll see you next time.